video, we are going to demonstrate you top-down analysis and multi-time frame market structure using live real chart examples. We will demonstrate you how to take real buy and sell trade entries using these concepts. In the 4-hour, this is a 4-hour chart, 4-hour, okay, so when the daily is in uptrend, usually traders don't wait for that long, so what they do is, we are in the 15-minute charts now. In the 15 minutes, if you start buying in these locations, okay, so selling, okay, so what is top-down analysis? So let's start from what are higher time frames. Higher time frames are mainly the weekly, daily and the 4-hour. What are lower time frames? They are mainly 1 hour, 15 minute, 5, 4, 3, 2, 1, even 30 seconds. So keep in mind that you start analyzing the charts from higher time frames, then you go all the way down into the lower time frames. Weekly, daily, that's where you start. Okay, now let's jump into a practical demonstration. Okay, so this is an example for top-down analysis or multi-time frame market structure. So let's jump into the example and see how it goes. So we are in the micro E-mini NASDAQ index futures daily chart. So you can see in the daily chart, the price is in an uptrend, making higher highs and higher lows. So then if you consider these daily chart trend legs, so in this trend leg, and then there's a pullback leg, then the trend leg and the pullback leg. So if you look into this trend leg and the pullback leg in a lower time frame, so for that let's now go into the 4-hour time frame. So I'm now going to the 4-hour chart. So if I type 4-hour, and then I will have to scroll to that section. Now you can see in the daily trend leg, so in the 4-hour, so this is a 4-hour chart, you can see during the daily trend leg, the 4-hour is in a uptrend. In the daily pullback leg, so this is the daily pullback leg, you can see the 4-hour has changed into a downtrend. And then again in the daily trend leg, you can see the 4-hour is going into a uptrend. So this is the important point for you to understand in this example. So the daily trend leg is the red color leg. Now the blue color area is the 4-hour trend. So you can see it's making higher highs and higher lows. So clearly in the daily trend leg, the 4-hour is in a uptrend. And you can see, as I said earlier, when you go to the daily pullback leg, you can see the 4-hour is making lower highs and lower lows, which means the daily pullback leg, even though it's a pullback for the daily chart, for the 4-hour chart, it is a downtrend. So we will discuss about this in more detail in future lessons with real trade examples. For now, you have to understand the top-down analysis and the multi-time frame market structure. And now what we will do is, we will now go into a further level down, let's say into a 15-minute, and see how the multi-time frame applies to 15-minute. So the whole idea is, you can see that when you go into multiple time frames, you will see the trend depends on the time frame. So what I mean is, so when I say the trend depends on the time frame, see in the daily it's a uptrend. But in the 4-hour, this area is in uptrend, but this area is in a downtrend. Then this area is in uptrend. So in the 4-hour, you can see the trend has changed from uptrend into a downtrend, again into uptrend. But in the daily, it's just the uptrend. So if it's not clear, don't worry, we will explain this with practical examples. Okay, so now let's jump into a 15-minute time frame. Again, in the 15-minute time frame, you will see a different trend based on the the trend legs of the 4-hour. So let's jump into the 15 minutes and see that. Okay, so now you can see we are in the 15-minute chart, And the blue color line shows the 4-hour trend, which is in at this moment the 4-hour is in uptrend. So now in the 15-minute chart, we can see with the 4-hour trend, if we draw the higher highs and higher lows in the 15-minute chart, and you will see when I draw the higher highs and higher lows in the 15-minute, you will see the 4-hour pullback, which is the pullback of the 4-hour uptrend. The pullback part will be a downtrend for the 15 minutes. I know it's not clear, so let's jump into the chart. As you can see, in the 4-hour uptrend leg, you can see the 15 minutes made higher highs and higher lows, which means the 15 minute is also in a uptrend. However, as you can see in the pullback of the 4-hour uptrend, which is the pullback leg, remember still the 4 hours in an uptrend, but you can see the 15 minute has started to make lower highs and lower lows, which means in the 4-hour uptrend leg, 15 minute is in an uptrend. But in the 4-hour pullback, it's just a pullback for the 4-hour, but for the 15 minute, it's a downtrend. Okay, let's see what's next. So as you noticed, depending on the time frame, the trend will look different. So in this whole example which I explained to you, the daily was continuously in uptrend during that time period. But if you go to 4-hour, you saw the 4-hour was in an uptrend in the daily trend leg, but 4-hour went into a downtrend in the daily pullback. And then if we just take the blue color line and went to the 15 minutes, that means from the 4-hour into 15 minutes, what you noticed was during the 4-hour uptrend leg, 15 minute was also in uptrend. But in the 4-hour pullback, remember it's just a pullback, the 15 minute went into a downtrend. So this is what you have to understand with respect to top-down analysis and multi-time frame market structure. We will show you how to use this information in real trade examples in future sections, right? So hold on until that with live examples. So let's see what's next. Okay, so from the previous demonstration, what you understood was the trend depends on the time frame. So let's dig deep into that with more examples. And in these examples, we will discuss what we demonstrated earlier in more detail with more explanations so that you understand how to use it for real trade setup. So with the previous demonstrations, you saw how the higher time frame trend leg becomes the lower time frame trend as well. For example, when the higher time frame trend is bullish, you saw when the daily was bullish, then you saw the lower time frame 4-hour also was bullish during the higher time frame bullish trend leg. Then it's the same if the higher time frame is bearish, during the bearish higher time frame trend leg, the lower time frame trend is also bearish. I'm not talking about the pullback, I'm talking about the trend leg. Now let's see what's happening in the higher time frame pullback. As we discussed in the previous demonstration, during the higher time frame pullback, the lower time frame will go into a trend in the opposite direction. We had a look at it in the previous demonstrations. So the higher time frame trend retracement leg will become the lower time frame trend as you saw in the previous demonstration. For example, if the daily is bullish, then its daily retracement leg, during the daily retracement leg, the 4-hour will be bearish as you saw in the previous demonstrations. So again, for example, if the higher time frame is bearish, that means if the daily is bearish, during the retracement leg of daily, the lower time frame will be bullish. So you saw it for a bullish example, it's the same for a bearish example as well. Okay, so let's see what's next. The demonstrations is going to be the next part. So during this, we will look into more real chart examples in the micro mini NASDAQ index futures, and let's jump into them now. Okay, so now we will see where you can buy and where you can sell using top-down analysis or multi-time frame market structure. Okay, so when the daily is in uptrend, the red color line, what you can do is you can go to the 4-hour and you can buy in these pullbacks of the 4-hour. So over here, for example, you can buy. Over here you can buy in the pullbacks. In the pullbacks over here you can make a buy entry. Okay, and then when the daily red color goes to red color line, the daily pullback, so normally the daily is an uptrend. But in the daily pullback, because the pullback is for nearly 1 month, if you look from here to here, the pullback has been nearly for a 1 month. What you can do is, because the 4-hour has gone into a downtrend, during the daily pullback, you can start selling in this 4-hour pullback locations. Now this is interesting. It is interesting because normally when the daily is in an uptrend, we should take buy entries because we are following the trend. But why did we say that in the daily pullback that you can sell? The reason is because the pullback of daily will be lasting for nearly 1 month. So if you wait for the pullback to complete without taking a trade, it's nearly a 1 month. So usually traders don't wait for that long. So what they do is, for example, if the daily is in an uptrend, they will go to the, during the daily pullback, uptrend pullback, they will go to the 4-hour and they will start selling. But when they sell, they will be very careful and mindful that they will be selling only until the daily pullback is there. When the daily pullback is over and when the daily again starts in the uptrend, then the traders will again start buying. So let's see it again in the chart. So as we said earlier, so you can buy, but in the daily pullback, because as we said earlier, it's nearly 1 month, so you can start selling. So this is how you use multi-time frame or top-down analysis to make your trade decisions. Okay, let's see what's next. So in the when the daily uptrend, when you go to the 4-hour, when you start buying in the 4-hour pullbacks, you can buy confidently in large quantities and you can hold your buy trades for higher profits. But during the daily pullback, when you start selling, you will take your trades very conservatively, meaning very carefully. Even if you sell, it will be a quick sell where you quickly take your profits. You don't hold the trades for long because you know it's not the main trend direction, which is the daily, which is just a pullback. So when you buy during the daily uptrend leg, the red color leg, when you buy in the 4-hour blue color areas, you are trading in the direction of the trend. But when you sell in the daily pullback red color, when you go to the 4-hour and sell in these blue color pullback locations, we call it as counter trend compared to the daily uptrend, because daily is in uptrend. In that case you should buy, but instead of buying you are selling, so that is counter trend. But you take counter trend trades with a proper understanding. Okay, let's see what's next. If you understand this concept and if you do this carefully, you can make profits and you can make better trade decisions. So this is the beauty of understanding top-down analysis. Okay, let's see what's next. So the same thing can be done in the 15 minutes because the daily is in an uptrend, the red color line. Then during that, the 4-hour sometimes is in uptrend, then during the pullback, the 4-hour is in a downtrend. But now again in this area, the 4-hour is in the uptrend, the daily is also in the uptrend. So what you can do is, in this 4-hour uptrend leg, you can go to 15 minute chart of the micro and NASDAQ index futures, and you can start buying in these pullback locations of the 15 minute. And when the 4-hour goes to the pullback, knowing its 4-hour pullback, you can conservatively start selling in the 15 minute, but you do it very carefully knowing its counter trend, and it will be quick short trades. So let's jump into the 15 minutes chart and see how it works. But again, keep in mind, when you do this, when you go to the 15 minutes and if you are buying that's wonderful. That's not a problem. Why? Because you are buying in the direction of the daily and the 4 hours. So they are going to be strong trades and high probability of being winning trades. But if you go to the 15 minutes and start selling, you have to be very careful because it's counter trend. Let's jump into the 15-minute chart. Okay, so we are in the 15-minute chart now, and as I said earlier, the daily is in uptrend, wonderful. 4 hour is also in uptrend in this trend leg, wonderful. That means in the 15 minutes, if you start buying in these locations, they are going to be very strong trades where the winning probability is very high. But when the 4 hour goes into a pullback, during the pullback, some traders will start selling in the 15 minutes, but again knowing they are counter trend trades. So they are going to be quick trades where if you sell, you don't hold the trade for long, you will quickly take profits, right? Some traders don't take these counter trend trades. If you don't take these counter trend trades, and if you take only the trades in the direction of the higher time frame, in this example, higher time frame, the daily and now the 4 hour trend leg is up, meaning uptrend. So some traders take only those trades, meaning they just only buy during this uh, trend legs. So that if you only buy, that means your winning probability increase and there's a chance of you making more profits. So, but some advanced traders, when they become experienced, they can do counter trend trades. So this is the beauty of top-down analysis or multi-time frame market analysis. Okay, let's see what's next. Okay, so now we will look at an example of a downtrend and where we can use top-down analysis and multi-time frame market structure to take buy and sell trades during a downtrend. So let's jump into the charts and see how to do it. Okay, so we are in the micro mini NASDAQ index daily chart. You can see during this, the daily is in a downtrend. So now let's jump into the 4 hour. So you can see during the daily downtrend leg, the 4 hour is on a downtrend. Again, during the daily downtrend leg, the 4 hour is in a downtrend, making lower lows and lower highs. Then you can see during the daily pullback, the 4 hour has gone into a uptrend. So you can, during this, you can start selling in these pullback locations in the 4 hour chart. Again, you can sell in this pullback location in the 4 hour chart. Then here you can start buying in these pullback locations, but remember it's going to be counter trend and you have to be very carefully doing it. Okay, let's see what's next. So then during this you can also go into the 15 minutes or not even 15 minutes, you can go into 5 minutes, 2 minutes, 1 minute and look into this pattern and you can start taking trades. So during an uptrend or during a downtrend, you can apply this concept of top-down analysis, multi-time frame market structure and start taking trades. So you will start from daily, you can go to 4 hour, then you can go to let's say 1 hour, 15 minutes, 5 minutes, 3, 2, 1, even 30 seconds. So this is the beauty of using top-down analysis. Okay, let's see what's next. Okay, so why is top-down analysis so important for traders? Because it increases your chance of winning and your win rate, number one. The number two, make sure to trade in the direction of the trend, especially in the direction of the weekly or daily chart for high win rates. So if the daily is in an uptrend, where as much as possible try to take buy entries in the 4 hour or 15 minute or 5 minutes. If the daily is in a downtrend, try to take as much as possible sell entries in the 4 hour, 1 hour, 15 minutes, 5 minutes. That increase your chance of winning. Okay, let's see what's next. Okay, so this is summary of the section what we discussed. We discussed what is top-down analysis, why is it important, and how to navigate from higher time frames to lower time frame, and how to understand the direction of the trades, and especially how to take buy entries and sell entries during uptrend and a downtrend using higher time frame, top-down analysis, and multi-time frame market structures. Okay, so this is the end of the section and we will see you in another section. Take care.